By the end of this lesson, you should have a full grasp of what the Forex market is all about and what it entails, from basic terms such as pip margin, leverage, stop loss, lot size, volatility, to complex terms in the market. That is to give you a beginner oversight of what Forex trading is all about and help equip you with the right foundation you need to get started on your Forex journey. Hello there and welcome to another lesson. This is your boy Collins. If you're a returning subscriber, you know what is coming. Please smash the like button for me to help with the algorithm. If you're new, stay through to the very end of this lesson and I promise you it will be worth your time. Let's get right into it. So today we are looking at what Forex is and understanding some basic principles as earlier said. So what at all is the animal called Forex? Well, we have a lot of markets. We have the crypto markets, synthetics, commodities. We have futures markets and a whole lot of markets out there. So Forex market is also one of the traded markets in the world. Now, Forex is an abbreviated form for foreign exchange. And over here, we are talking about currencies. So we have the US dollar, the Japanese yen, the Swiss, South African rand, and a whole lot of currencies. So Forex is the abbreviated form of foreign exchange. Should you travel from one country to the other, you will have to convert your local currency into the currency of that country to be able to make a purchase there and survive there. That essentially is Forex trading. So for majority of us, in a way or two, if you've had the opportunity to move from a country to another, you most likely have engaged in Forex trading. So Forex trading, in essence, is of course the exchange of currencies. Yes, and it is important to note that this is the world's largest market. This is the world's largest market with over $6 trillion traded in every single day. That is so much of currency trading going on in the world, and I guess we all know why. In our era, you cannot do anything without money, currency, and so it is only but not a surprise to know that it is the world's largest market. Let's delve further into understanding what this is all about. So we have the Forex market as said earlier. Now, who trades the Forex market? Well, as you of course would be thinking, literally everybody trades the Forex market. So we have it all the way from the top where we have the central banks, the big institutions, big financial institutions, down to individuals which are called retail traders in the market. So literally everybody is a trader in the Forex game because day in, day out, we exchange currencies. This is no rocket science. Let's move on even further. So in every country, you have to understand some basic terms. In everything you do, you need to understand some foundation terms. Okay, language is very key. And of course, in the Forex world, there is the language which every trader is expected to understand to be able to thrive in the market. Some of these basic terms I have outlisted here are broker, platform, pip, margin, and down to the last one, which is the take profit. So quickly, let me delve into these terms and let's understand what they are. So your broker is the company which gives you access to their platform to carry out your transactions. Now, it is essentially important to understand that the Forex market requires a very large sum of money, a large amount of money to trade. I'm not talking about $1,000, I'm not talking about $10,000. It needs big time cash to trade. And for the previous while, this has made it very difficult for individuals to trade and earn in this market. Well, with the advent of technology and the betterment of systems, these companies called the brokers have now allowed individuals, which are the retail traders, access to their platforms to carry out trade transactions. So your broker is the company which gives you access to their platform to trade and earn off from the market. Moving on, platform. So some brokers have their platform, but for most of them they don't. Well, a Forex platform is where the trade transaction actually happens or goes on. So of course we have the Walmart company, and a Walmart store becomes the platform. It's where the trade transaction actually goes on, where the buyer goes in, places an order, and is served. So your platform is where the transaction goes on. Quickly taking a step back, some of your brokers could be your Exness, Wanda, Deriv, Tigerwith, and so many others. Do take your time to explore all of them and see which best suits your location, your trade style, and any other considerations you might be looking at taking into perspective when making your selection. Now back to platform. So some examples, or the most common examples of platforms we know of, are the MT4, the MT5, that is the MetaTrader 4 and the MetaTrader 5. Some platforms such as TradingView give you access to trade on them directly. So we have platforms like TradingView which allow you access to just carry out your trades and also have your analysis done. So your platform is essentially where you could do all of your analysis and you issue out your trade. Moving on to pips. So you hear this thing called a lot in a lot of Forex communities. You see 100 pips running, 10 pips running, 50 pips running, 1000 pips running. Pips is essentially the price change, okay, or the price movements across a period of time. So if price moves from a certain number to a certain number, the difference in those numbers is what we are referring to as the pip. Now this is a bit technical, it isn't as straightforward as it sounds. I have a full video, in-depth video, further clarifying on some very key things to note when it comes to understanding what a pip means. I'll leave the link down in the description. Do well to watch that video for full grasp. You really need to understand what these things are if you are looking forward to becoming successful. So it is a must for you to go watch that video, and trust me, as always, you'll thank me later. Moving on, so we have what we call the margin. Now margin is your security deposit. The companies, or in other words the brokers, have something on their platform called their leverage, which is of course buying power. It is just like these insurance companies and other financial assistance companies, where when you need money for a project but do not have it in full, they support you with the most part. So you just have to send in some money, then they are able to leverage up that money for you to carry out your project. Then per your profit gains, you pay them back their money in full, sometimes with interest. So essentially that knowledge also applies in the Forex world, where we have our brokers leveraging us per our margin deposit. So here is the idea. You deposit $100 into your account. Your broker offers you a leverage of 1:50. What that essentially means is that your $100 gives you a buying power worth $5,000, if my math isn't wrong. So your margin is that security deposit you make with your broker to be able to secure your leverage to make significant gains off from trading the market, or of course, in other words, significant losses. So you have to be very careful in your choice of leverage when wanting to trade in the market. Moving on to lot size, just as we have it in these companies, shipping companies and all of that, your lot size is essentially the number of maybe packets of goods you want to purchase, the number of boxes you would love to purchase. It is the same idea here. Your lot size is talking about the number of purchasing units you're looking at. So we have types of lot sizes. We have the standard lot, we have the micro, the mini, and the nano, which is quite rare these days. So that is it. I have very in-depth video to all of these things. Be sure to check out my other videos, and I'm sure you will have a further clarity on all of this. So volatility is talking about the market strength. Okay, how volatile Some finesse is talking of how aggressively it moves. Your volatility is telling you how aggressive your market is going that way, the range movements and how fast they occur. And this is very crucial in trading because you don't want to be trading at every time of the day. There are specific hours which, when you trade, you're more likely to secure your wins before the market messes up, right? And so it is very key to take this into consideration. I'll make a full video on this one, maybe 10 minutes long max, explaining what it is, because it is very crucial in understanding how to be profitable in the market. Moving on to candlesticks, we all hear this all of the time. So when you open your platform, we have a lot of different forms of representations. We have the line representations. I think the bars are also on some platform. Then we have the candlesticks. The candlesticks was the idea these Japanese rice farm traders came up with, and the candlestick tells you or gives you a better oversight and in-depth view of the market. So it shows you your highs, your lows, your open, your close, and a whole lot of stories which you will need in becoming a profitable trader. I have a full video explaining what candlesticks are. The link to that video will also be in the description. Be sure to check it out. Then we have equity. So your equity is your floating price from the time you issue out a trade command until when it's done. So the equity shows you every single price move right from the time you have taken your trade to when it is completed. Don't worry, again, full in-depth videos will be released on all of these things. I think I should make a series on these things, fundamentals of Forex. So we would pick a broker who would fully exhaust the concept. We would pick another thing, maybe volatility, fully exhaust the concept, and we'll do it for all of them. It will significantly help to give us the solid foundation which we need to be profitable. So we have the stop losses and your take profits. So what they of course tell you, the name is pretty straightforward: stop my loss and take out my profit. So your stop loss cuts you out of the market, takes you out of a trade when it's going against you to prevent further loss or further damage. Your take profits also secure your wins before the market reverses. So those are some basic important things you need to understand in the market. So let's look at some pros and cons of Forex. I'll be very quick with this one. The first one we have here is the money possibilities. So yes, guys, you'll hear people saying, I flipped 1,000 to 10,000 in 24 hours. I flipped $500 account to $100,000 account in 1 month, 2 months. All of this is possible, guys. The possibilities are endless, but you have to note, it is important to note that this is only based on your skill level. You get it? Your skill level and risk management and a whole lot of things will determine your possibilities in your world of trading. So yeah, anything is possible. We have heard stories of great traders like George Soros, who made a whopping $1.9+ billion in a single trade in a single day. You get it? So the possibilities are endless, but your wins are directly proportional. Your wins are directly proportional to your knowledge standard. You get it? And of course, some bit of luck. Moving on, the second thing we have here is freedom. So unlike a lot of jobs out there where you have to work your ass off 9 to 5, the Forex market provides you the luxury of freedom. You're allowed to trade anytime you want and chill anytime you want. It is pretty straightforward. Let's move on to the next one. Emotional build-up. Now, I've heard a lot of people say that Forex traders are heartless. They are emotionally brutal. To say that they are of less emotions, if that's a thing. Well, strong mental capacity is an irrefutable principle when it comes to being a professional, profitable Forex trader. Because you open your MT5, MT4 and you see a drawdown, you are not moved to close out, or you see a take profit, you're not too excited. You don't call your whole family telling them you're the next Bill Gates and the trade goes wrong, not in your direction, then you become bottom down, crushed, depressed. No. So trading requires a lot of discipline over your emotions. So over time, people tend to become emotionally built up just because of trading, and that is a plus. And the next thing we have here, Forex is adventurous. Well, of course, this is adventurous. We have different conditions in the markets. We have the fundamentals affecting the market day in, day out. The market is always changing character. So it is always adventurous and fun to explore the market and its new phases it provides over time. Then my next point here is longevity. Guys, Forex has been here for years and it's not going down anytime soon. If you're looking out to starting something profitable which can really, really last, I recommend trading for you. Now let's talk about some cons of Forex. Of course, there is the bad side and good side to everything. So let's do this. First thing, we have money loss possibilities. Just as we have money gain possibilities, we also have the money loss possibilities, guys. So it is essential that you know that there are days where you will lose. Okay, it's inevitable. There are days where you will suffer losses in the market, some small and some great. But again, all of those things could be minimized to the very bottom using things like risk management and a whole lot of other factors I'll be talking about in my subsequent lessons, and which for some of them I have already elaborated in some of my previous lessons. So be sure to check them out. So yeah, if you are not good, if you do not have the right strategy, the right risk management, the right psychology, and you go into the Forex market, you might as well just lose all of your life savings. So take caution. Zero supervision. Some people tend to be of very low performance under zero supervision. So when you're a Forex trader, and most especially when you are a retail trader, when you're an independent trader, you have no supervision whatsoever. You have nobody telling you to sit down and read the charts and get to work. So some traders who are indisciplined tend to become lazy over time and irresponsible with their Forex trading career. Do note that to become profitable in the Forex space, you have to treat it as a business and not as a hobby. So be conscious of this animal. Zero supervision. Moving on, we have emotional torture. I've taken trades where there has been drawdowns for days before the market finally reversing. Did I almost say rehearsing? Before the market's finally reversing to smashing my full TP, guys. It's pure emotional torture. You will take a trade, you will see it moving in profit, then you see a retracement into your loss area, see it going back into profit, and it keeps happening until either one of those sides, which is your full TP or your full SL, gets smashed. So there is a bit of emotional torture from the start, but this dies off over time because you just tend to understand how the market works over time, and so you are not really moved when things are moving the way they do. Then of course we have the ever-changing markets already said. Now moving on, it is very, very essential to know and accept that in everything you do, in every business you do, you need to understand certain key principles in order to be successful. Same comes down to Forex trading, guys. So there are some things you definitely have to do to be a winner. I'm going to quickly brush through this. Let's go. Number one, learn the language. Forex trading is a language, guys. It is a language. So you have to understand some of the basic languages. You have to understand some of the fundamental languages like the ones I've shared in this video, and so many others, which I of course will be elaborating on in my subsequent lessons. Then you have to have a winning strategy. So this is where, after understanding the fundamentals, you try to piece them together and see what works best for you on the market. Then you have to practice proper risk management. Most traders lose not because their strategy is bad, but because they are probably risking too much in the market. You want to be very conscious of this. I will make a full video of risk management coming up soon. Then of course you need discipline. It is same for every other thing we do in life. Then there is that consistency factor. Consistency is a big eye opener in the markets. Trust me, there is no better trade guru, there is no better mentor out there than the market itself. Spend a lot of time reading the market, seeing market behaviors, and you will have a lot of eye-opening insight to how it operates. Then of course, patience is the big virtue of life. In everything you do, you have to be patient and trust that everything is working out for your good. That is it, guys. Thank you so much for watching to the very end. Do not forget to watch my recommended videos on candlesticks and also on pips and all of the others, which I will leave a link to in the description. I will catch you in the next one. As always, trade green and peace out.